Thank you to the Central Bank of Chile and Sophia and Jorge and the team. They've done a wonderful job putting this together. And so I would just like to welcome everybody. We're going to start off with a poll, an audience poll. Usually when we do polls, we ask the audience to think seriously about the questions. And in this case, I want to get just your initial reactions to these questions, because after the presentations, we're going to ask you the questions again. And I'm hoping that we get a different answer at the beginning. So please don't think about it too much at the beginning before we do this. So just what are the potential benefits of monetary policy transparency? Try to choose two, but if you can't resist, you can choose more than two if you want to. So what are they? Improved monetary policy effectiveness. So things work through the monetary policy transmission mechanism through affecting longer term interest rates and the exchange rate and so on. And so being clear about policy could improve the efficacy of monetary policy. Requirements of democratic principles and accountability. Build support for central bank independence and policy. Simplify central bank communications. I want you to think about that as they're speaking. And of course, increase economic literacy. And then of course, a category that includes everything else. So I want to go back to the late 1980s, before New Zealand announced inflation targeting, and described the amount of skepticism that there was at the time about what New Zealand was doing. But of course, the story is that many countries learned from the experiences of New Zealand and other early pioneers, and now it's become a very dominant form of monetary policy that is evolving. And I think we're going to be touching on how it might be evolving. The three experts that we have today are very special in the sense that all three of them started off as economists, researchers, were involved in implementing or either building what we describe as a forecasting and policy analysis system that was designed explicitly to support policymaking, inflation targeting. And then they became policy makers. So we have Pablo Garcia from the Central Bank of Chile, who is currently a board member, who was I would say a principal person in the development of the framework. He's the first to point out that there were many people that contributed to this. We have Thomas Hullab, very similar story. Started as an economist and then became the key person at the central bank that basically was implementing this system and communicating to policymakers. And now he's a board member at the Czech National Bank. David Archer, same thing. Same story, except it's New Zealand. I'm going to ask Pablo to go first. We're going to spend a few minutes with an introductory presentation by Pablo, and then we will turn to Thomas and finally to David. Okay, so I'm going to start off by that, but I just want to give you a brief view of transparency in these three countries. So inflation targeting starts off with something very simple, like announcing a numerical objective and not really having an analytical framework to support forward-looking policy. And so monetary policy transparency in all these countries starts off really low. They invest in developing this forecasting and policy analysis system, and that becomes the foundation for improvements in transparency over time. So this is the story about New Zealand. This is the story about the Czech Republic, very similar sort of story, and this is the story about Chile. We have designed a special methodology for measuring transparency in these very transparent central banks. According to Dinser-Eichner, they're perfect. In our measures, they're a little bit less than perfect. It's taking a long time to actually develop different measures for countries because it takes a lot of effort to go back and really understand the history and so on. So you researchers out there, we are getting asked all the time, when are we going to have a bunch of estimates, time series estimates that they can plug into their regressions? And believe me, the stories that come out of this are going to be much more useful, I think, in those regressions than estimates that do not take care of these details. Now, you can use this methodology in a different way. If you're a central bank, for example, it takes no more than 30 minutes to compute these measures of transparency at a point in time, like currently. And so you can use those measures, first of all, to think about how we've constructed transparency, whether or not you agree with those concepts, but also to measure gaps that you might want to fill over time, and what needs to be done to further improve the forecasting and policy analysis system to be able to do that.